Wealth with Gary Quackenbush is sponsored by the Word on Wealth Radio Network.
The airing of this program by this station is not an endorsement or recommendation by the station of the products or services discussed in the program. The station does not guarantee the results of any investments made by a listener to this program.
No results, no investments.
This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's Gary.
Happy Tuesday. We have our whole group. Have you ever wondered about a reverse mortgage? You hear that term and some people go, oh, don't know what that's about. That doesn't sound right. Well, we decided to clarify that and get an expert on our team at Word on Wealth to answer all of our questions about reverse mortgages. We have the privilege of having Shanne Sleder. Shanne Sleder is a mortgage advisor that specializes in reverse mortgages and regular mortgages, and he can answer all of our questions. So we have him here on the air with us today, and he is going to be with us every Tuesday from here on out. So Shanne, welcome to the Word on Wealth.
Hi, Gary. I'm excited to be here and excited to be part of this program.
We're just glad that we have you to answer all of our questions. The topic today, I love this, is we're going to talk about, starting out, I want to ask questions about reverse mortgage to purchase a home. I think a lot of people think that the reverse mortgage is only some super old person in their house and they have a mortgage and they don't want the payment anymore, so they go and do a refinance. But then there's this thing called a reverse purchase, which always sounds kind of funny, but using a reverse mortgage to purchase a home. So I want to ask about that a little bit. I mean, can you do it? How does it work? And then we'll talk kind of the advantages and disadvantages of that. Okay.
Sounds good.
So tell us about, first question is reverse mortgage to purchase a home. And I also want to, you guys right up front Shanne has offered us a special deal. So if you want to figure out like about a reverse mortgage, like let's say you just wanted a free guide that you can read on your own, he's offering that. So today, if you text the word reverse to 858-683-1716, 858-683-1716, text reverse to that number and you will get a free reverse mortgage guide. It's good, it's short, it's helpful, and it will help you understand and kind of, it gets rid of some of the myths. So Shanne, tell us about a reverse mortgage to purchase a home. Can you do it? How does it work?
Yes, so it is a program that allows a senior who is looking to what I call right size into a property that is going to be best for them in retirement to be able to use a reverse mortgage to purchase that home so that they can get into the house without having a monthly mortgage payment. They can use some of their money from the sale of their current home, but not have to use all of it, and be able to get into that house and not have to worry about, taking on maybe a larger payment that they were concerned about.
So in this reverse mortgage purchase, this would be like the senior, like they'd sell their home, they have a certain amount of money they can put down on a house. They do the reverse mortgage purchase just like it's a regular conventional loan, except it doesn't have a payment, basically, right?
Correct. So what they're going to do is they're going to look at the purchase price of the property. They're going to take into consideration the senior's age and the current interest rates, and then they're going to come back and they're going to say how much money the reverse mortgage makes available. So let's say they're looking to buy an $800,000 property and the reverse mortgage makes $400,000 available. Then the senior would come in with $400,000 from the sale of their house as the down payment, but maybe they netted out $800,000 or $1 million from the sale of their house. And instead of having to come in with all cash to accomplish not having a mortgage payment, they're able to come in with only 50% and keep that additional money for remodeling the house, for future retirement needs, whatever it might be.
Excellent. So it seems like there's a lot more flexibility in a reverse mortgage than I think people think. Now, I want to ask on like a reverse purchase. Let's say somebody, it's a scenario that you were talking about. They come in, they do the reverse purchase. Later on, if they wanted to, like let's say in that reverse mortgage, the equity in their house builds and they decide they want to pull more equity out or open a line of credit. Is it possible to do that again, like a reverse refinance and get equity out if they wanted to later?
It is. They can always look to refinance to take more money out with a reverse mortgage if the numbers work. But one of the great features with this reverse purchase, if it's set up properly, it's the only program out there where a client can make monthly payments if they want to keep the payment interest down from growing. But if it's set up with a line of credit to begin with, any money that they pay towards that, they can then take out in the future again. So it can be built with a line of credit in it already so that they can draw more money out in the future if they want to.
Interesting. So as far as a reverse mortgage purchase, compare that, like the benefits of the reverse mortgage purchase, buying a home with a reverse mortgage rather than just going in and just paying all cash. Like in this scenario you're talking about, they sell their house, they get $1 million. I mean, we're throwing around big numbers, but it is Southern California, right? So they sell their house, they got $1 million, they put it all down on their next house because now they're kind of in the right size house. What's the benefit of doing a reverse mortgage purchase rather than all cash?
So when they're paying all cash, you're basically taking all of the money that they took out from their other sale and burying it in the home. So it's no longer liquid. It's no longer available for them to tap into if they ever have any medical needs, ever need any additional retirement income. Whereas if they use the reverse purchase, they're able to keep a percentage of that liquid for any future needs they may have, and they still accomplish the same goal of having no monthly mortgage payments, which is, I think, probably the biggest fear of most seniors in looking to buy a new home. And what happens a lot of times is that a senior will feel like they're stuck in the home that they're in, even if it's not the right size, if it has stairs, if maybe the yard is too big, because they're fearful of what might happen to payments, what might happen to their future property taxes, whatever that may be. And there are solutions that we can put in place that will allow them to right size into a home that is right for them for their future retirement.
Okay. So what it sounds like to me is that if there's even this possibility, somebody's deciding they want to sell their home, they want to get into the right size home for their retirement, they don't need as much, they don't want 2 floors anymore, they want single home ranch style. If they're thinking about that, it sounds to me like the thing to do as part of that thinking process is to give you a call and have you part of that process as well. Like how it works to get qualified for the reverse mortgage, figure out how much they could, figure out what their options are. Does that sound about right?
That's correct. It's always an option that we want to look at, whether it's the option that we end up determining is right for the client. It's worth looking at to see if it is.
Okay. So now the easiest way to get a hold of Shane, we're going to give him the 858-683-1716. And that's where you can call, get directly through to Shane and his team and figure out a time when you can get with him and talk to him about setting up anything where you think that you might qualify for a reverse mortgage. You got to talk to Shane. That's what I've been doing when I send my clients to him. He talks them through options available. It's not a big sales pitch, because I put people on my team that will give options to my clients and our listeners. And that's what we're doing with Shane. 858-683-1716. And if you're going to text to that number, text reverse to 858-683-1716 and get your free reverse mortgage guide from Shanne Sleder. All right, we'll be back in a moment. Talk about reverse mortgages, right sizing for retirement.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQLaw.com.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christians just don't understand that the money they save for retirement usually helps fund the abortion industry and other liberal anti-family causes. But did you know that with just a few minutes of your time, we can screen and clean your investments at no cost to you? It's absolutely complimentary. Just go to the website right now, download a free copy of my book, Faith-Based Investing. It's free as well. You deserve to know the truth as the investor. Then the choice is yours. You can keep doing what you're doing, or you can line up your investments and life savings with your beliefs. We are fiduciary investment advisors. You can feel good about investing with confidence. So learn more now. Go to BibleSafeInvesting.com or call me at 931-RETIRED. Your free book is waiting for you. Go to BibleSafeInvesting.com and be sure that you listen to Faith-Based Investing this weekend right here on Family Talk.
Gary, how do you and your team help our listeners avoid probate?
Well, first of all, probate is a process that involves attorneys, judges, and sometimes contesting parties. And so we try to avoid probate at pretty much all costs. The way we do that is setting up living trusts, setting up properly documented wills, putting the property like houses, cars, bank accounts in that trust so that it avoids probate. Probate is only necessary if the estate plan isn't set up quite right. So we help them get it set up right. And mainly that's done through a properly created living trust.
Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free initial consultation. That's gqlaw.com, 855-500-TRUST.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate experts. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Gary Quackenbush of The Word on Wealth. You hear Ken every week here on The Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group, from single-family attached homes to luxury high-value waterfront properties to apartment buildings. Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com, or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST, gqlaw.com.
All right. We've got Shanne Sleder. Good grief. Let's start again. Hey, you guys, we've got Shanne Sleder. He is our mortgage advisor here on The Word on Wealth. We've got him here every Tuesday. So this is super exciting news because I have been trying to find a qualified mortgage expert for about 2 years now. And we finally got Shanne. He's referred to us by a good friend of ours. And we're just super happy to have him on the show. So I'm thrilled to have him here. He's answering our questions. If you want to be on the air, ask Shanne a question, please call right now. 888-344-1170, 888-344-1170. You can call and ask a question. That way it can be specifically answered, and we'd be happy to have you on the show. Shanne, you said before we took that break that seniors feel stuck in their home. And I, 35 years of being in estate planning, trust administration, estate attorney, when you said that that's something that you have noticed in people, it just resonated with me because that is absolutely the case. People feel stuck in their homes. They're like, I can't move. It's too big. It's 2 stories. I have trouble going up the stairs. I'm just going to sleep on the couch. And they really, really feel stuck. And so I love this explanation of you have enough money. My gosh, you're in Southern California. You've got gobs of equity in your home. You're not going to have to recognize a gain or something like that, because there are things that you can do with reverse mortgages, reverse purchase, and having that consultation with you, I just think is the key. You guys, if this is your situation in your family, for parents, for friends, Shanne's number is 858-683-1716. Shanne, would you talk to us a little bit more about, right sizing for retirement? What is that? How do you help people kind of get into the right size place for the retirement?
Sure. Well, I think when you're making a decision to retire, if you're early in retirement, you've got to realize that retirement might look different in 10, 15, 20 years down the road as far as what you may need in regards to the house you're living in, what your health concerns may be. And so when we talk about right sizing, it could be getting a property that doesn't have as large of a yard, so you don't have to worry about taking care of it. Maybe your water bill will be lower, your maintenance bills will be lower. Like you mentioned, it could be stairs. It could be even a home that has more upgrades to where it makes life a little easier for you. Maybe it's something to do with your health, so you can be on a bottom floor with a wheelchair, a walker. Lots of different reasons why you might need to right size into a different type of property. But I think a lot of times seniors don't realize that there is an opportunity for them to be able to make that work. And they go through the next 10, 15 years of life struggling, thinking that they don't have any options.
Okay. And so they're stuck because they don't want to get a mortgage payment. They're afraid of that because they don't know the reverse option. They don't want higher payments. They're worried about higher home values. And then with this reverse purchase, you're talking about if you're moving into a higher value house, even if it's, because that would happen, I would imagine. Somebody's in a house, it's 2 stories, it's small. They want to go into a flat house, like a ranch, and they find it costs more. They don't want to spend more money. Yet you're saying well, you've got lots of equity. Let's tap it during the purchase, tap it with the purchase, tap it with a reverse mortgage so that you can at least take advantage of that. I just, I don't know. I get really excited about this stuff. And that's why I kind of stutter a little bit, because I just see this a lot, Shanne, and I'm dead serious. I am so happy to have you as a partner in this show, because I have trouble explaining this stuff to people. I literally had somebody just the other day, and the way the conversation went was $2 million home on Medi-Cal. Okay, so he owns a home. It's an exempt property. He doesn't have any other income any other way. He's got some Social Security coming in and just barely squeaks by because he's on Medi-Cal. And I said, you're sitting on $2 million of equity. And he said, yeah, but if I get a reverse mortgage, then I'm going to lose my Medi-Cal. And my response to him was, so what? Do the math. If he doesn't even have heirs. I mean, where does the problem? Why are you trying to preserve equity? And there's the kind of this mindset, almost like, here's this growth in this property. We don't do anything in Southern California to have our property values go up. They just go up. It's not earned money. Why do we have this obsession with it's bigger and bigger and bigger, but I don't want to touch it. I want to preserve it. I just feel like I'm sitting on this mound of equity, but I don't want to touch it. I'm trying to preserve it for what? I mean, that's my response. So I've had a couple of people that I said, think about a reverse mortgage, because maybe you lose your Medi-Cal benefits, but if you pull $800,000 or $900,000 out, or whatever the limits are, because I know reverse mortgages are big now, you have money to spend. Would it be better to have that available so you can travel and maybe do things to your house and make it nicer and do the math? And he went, I never thought of it. So I said, then call this number. So I gave him your number. I literally 858-683-1716. And he said, I will call and figure that out. So you'll be giving him options in the next couple of days. The other thing was, and I warned you, I was going to ask you about this. A big concern that I see is so dad dies, mom's in this house, massive equity. If she sells the house, there's no capital gain because the basis was reset when dad died. The concern about the kids I see a lot of times is they say, if mom gets a reverse mortgage, she's just going to spend it all. Because I've seen that. They get a reverse mortgage, $400,000, and suddenly they have to remodel the whole house. And the contractor comes in and goes, oh yeah, you need to do this and that and the other. And it's 50, then it's 80, then it's 100, then it's 120, then it's 150, and then it's, $200,000 remodel. And next thing you know, the money's gone. And I've seen it happen over and over. But you said Tuesday on our show, you said, Gary, I can set it up to where they just set up the reverse plan and you drop a certain amount into their bank account every month as kind of their quote retirement income. And then that's what they live on. And that helps them budget it. Can you talk about that a little bit?
Sure. So first off, there are limits as to how much the senior can take out in year one. So they can't take all of the money out at one time that's available to them. They're capped at 60% of whatever is available. So that does spread it out to a degree.
Good.
But we can also set it up to where there are either what they call a 10-year payment, which would be the same amount for the rest of their life, deposited every month into their account. Or we could set up a term payment, which would be, let's say, $2,000 a month for the next 5 years, 10 years, however long it may be, depending on how much money is available. But that does regulate the flow of how much money is coming out. Now, in the end, it is the client's money. They can actually go back and change the program if they wanted to. So they still have access to it if they need to or need other changes to be made. But at least this puts a little bit of structure into place on how much money they're able to get each month.
See, to me, Shane, that is responsible reverse mortgaging. I'm just making that term up. And that's why, because, and that's what I feel, because we're talking to Jim Robeson, obviously he's your friend and mine. And because I'm saying, is Shane for real? And Jim says, yes, he really does help people plan. And I just think, responsible reverse mortgaging is one of those things. I think kids are afraid that their parents are going to reverse mortgage and have, lose the house, which doesn't happen. And there's just all these myths. And I think our seniors are the ones that are kind of being uninformed or misinformed. And that's why I'm glad that we're here talking about it. I like the fact that you're talking about planning and saying, hey, let's kind of protect against these things you're worried about. So I'm glad you're doing that. I'm glad you're on the show. I do want to ask a couple questions. I mean, one thing is I want our listeners to understand, what is the benefit of connecting with you? Like, why Shane? Why not somebody else? Why not listen to an 800 commercial or something like that? Why connect with you for their reverse mortgage needs?
So when we're looking at the client's situation, we are going to be analyzing not only the reverse mortgage options, traditional options. We're going to be partnering with, if they've got a financial advisor, if they have your trust attorney, bringing in all of the parties into play to make sure we're making wise decisions, bringing the family in, if that makes sense as well, to discuss. And this program really does change lives. I've seen it firsthand with a lot of my clients, with how we have taken the stress and anxiety off their shoulders, allowed them to enjoy retirement and not feel like they have this burden on their shoulders all the time. And so, it really becomes true to the listener once they're able to see how it's going to change their lives. If they want to talk to me about the individual scenarios, I'm happy to review those, do a one-on-one session with them, and determine what makes sense, what's the best benefit for them.
Okay. Now, when you talk about going through some of their benefits, so let me talk about that a little bit. Like, if somebody needs money out of their house and they're just kind of thinking about it, I always feel a little bit of pressure, because it's like, you can get a reverse mortgage while you have capacity. But if you wait too long, you may suffer from a lack of capacity and you may no longer qualify. So that's why I'm always like, talk about it up front. If somebody comes in with a plan, are they locked into that plan? You decide to plan, they decide to do a reverse mortgage, you have this plan set up, and they're like locked in for life? Or is that something that you can rethink about it in a couple of years and say, okay, is this working? Can we change things?
There's definitely flexibility. There's flexibility in how the money is drawn, whether or not you pay it back, whether or not you reduce the amount of interest. A reverse mortgage can be paid off in the future, and a traditional refinance could be done. So there's lots of different options. But I think, I had a client come in the other day who was thinking about what they were going to do in the future. And I was able to bring a couple of points to her mind that she didn't think about, because one of the things she thought was, well, I may just sell the house and I may go become a renter at someone's house and just rent a room from someone. And I said, well,
2 minutes.
but do you see yourself doing that 20 years down the road from now when you're 80 years old? Do you want to be renting a room from someone? And what's that going to look like? And she sat back and she said, no, I don't want to be renting a room 20 years from now.
Mhm.
And so that's just talking through the scenarios a lot of times, bringing up other thoughts that could affect your decisions is what's key, having that outside advisor looking in.
Okay. I love that. And the fact that you're the advisor, man, that's my favorite part. So to get a hold of you, so I want everybody to know you got to get the reverse mortgage guide. So get that today, and you're going to write this number down. If for mortgages, reverse mortgages, for the free reverse mortgage guide, the number is 858-683-1716. Okay. And so if you text reverse to that number, 858-683-1716, you'll get the free reverse mortgage guide. If you want to call that number, that's also works. And you can get a hold of Shanne and get an appointment, and just grease the skids, get it going, start the conversation. Like, what are my options? Because I'm telling you, when you find out your options, that's the whole goal of the Word on Wealth program. You find your options. It's wonderful. Your eyes are open and you now have these different options, and you can choose. You have the power to decide your future and have that reduced stress. You have more freedom in retirement, and you can figure out ways so that it's done safely and accurately, and it works out perfectly for you. All right, Shanne, you got 15 seconds. Any last words for today on the show?
Well, again, I just thank you for having me on here. I enjoy educating people on what a reverse mortgage can do, how it can change their life. And I hope that people will reach out and learn a little bit more on how it can help them.
All right, listeners, we love you all, and we're grateful to have Shanne Sleder with us, 858-683-1716. We'll be back in a minute. Thanks,
You don't
Shanne.
need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We are here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com, 855-500-TRUST. Not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855 500 Trust. Or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com. 855-500-TRUST.
All right, we're excited to have Shanne Sleder on our show. He's on our Word on Wealth team now as our mortgage guy. Today, we were talking specifically about reverse mortgages, and we're going to continue that conversation regularly on Tuesdays here on the Word on Wealth. It's we're proud to have him along, proud to have him answering your questions. And as always, we have lines open. You can call and ask me questions, 888-344-1170. Shanne's number, I know some of you didn't quite get it. We were going kind of fast. You can get the free reverse mortgage guide, and you just text the word reverse. It's easy on your cell phone. It's a cell phone number. So on your cell phone, you say new message to 858-683-1716. And then the message is reverse, and you click send. And they will get you that reverse mortgage guide. He's a good guy, I'm telling you. We're going to be talking to him every Tuesday. Super happy to have him along. Some other questions that were posed to me that I want to answer. These come up a lot. I'm meeting with clients every day. A lot of clients every day. A lot of radio listeners. A lot of my former clients. Friends and neighbors. Just a lot, and it's really fun. I love what I do because I feel like we're being helpful to people, keeping them out of probate, keeping them, informed and helping them to pass their wealth on to their family members and take care of them while they're still around and here on this planet. So it's a good job. I really like doing it. And after 35 plus years of doing it, I still enjoy it. So a question was, this was, my parents died a year ago. I'm the trustee of their trust. I have been able to make most of the distributions, but my dad had a stock account in his name. The stock account is worth $440,000 and the investment company won't let me touch it. They say I need to go to get a court order to get the money. What court order are they talking about? My parents have a trust. Why do I need a court order? So the person that's asking is the successor trustee of her parents' trust. Okay. I'm just saying her because it feels like I don't know why, but we're going to say her. So she's the trustee of her parents' trust. There's a stock account with $440,000 in it. They won't let her touch it. Why they won't is because it's in her dad's name. If it were in her dad and mom's name, it'd be the same problem. Title is everything. If the title to the stock account says dad as the owner, dad can take that money out, nobody else. If the stock account had some designation that said transfer on death to my daughter, transfer on death to my trust, pay on death to my daughter, pay on death to my trust. If it has some designation that makes it so that it transfers from the investment company, the deceased person, to whoever the beneficiary is, or if it's a living trust, that works too. That's actually the best way. That money will pass. So her question that she's asking, it wouldn't even be an issue if either the trust or if she were named as the beneficiary of that account. So it's pretty clear to me that the investment account is in dad's name and there's no beneficiary designation. So that's a big mistake. Sorry, Dad. That's a big mistake. It is not uncommon. Look at your stock accounts. Look at your investment accounts. It doesn't matter whether there's 50 or 50,000 or 5 million. You need to figure out what's going to happen to those accounts when you pass away. So I would say if it's a stock account, an investment account, a brokerage account, that account simply needs to be named in your trust. It needs to be titled in your trust. Ask your broker, ask your financial advisor, figure out how it works. If you go on to, this is just because I've done it at this institution. you can go on, if you, let's say you have an account, this is the way it works. Let's say you have a stock account, a brokerage account at Schwab, and you've been playing with it, putting money here and there and moving around and seeing it grow. And some of it's in cash, some of it's in, in the market. And then you hear this and you go, oh no, that's actually in my name only. And that's going to be a problem. So then what you do is you go to Schwab and you say, open a new account. And Schwab is easy. It asks you, is this going to be in a trust or is it an individual? So it's a trust. That's your trust. It's revocable. Typical living trusts are revocable. Even if the first person has passed away, like if dad died and mom's still around, or your spouse died and it's still you. So you have these things where the trust is revocable, and it asks for the name. It asks for the date it was created. You open an account and you can move your money that is in your name. You can move it directly to that account that you just named in your trust. And you can move the positions. I mean, if you have money invested, you can move the money, what they call it, in kind. The positions that it's in, if it's in some mutual fund, you can move the mutual fund to your trust account. And then you can get rid of the other account. But that way, this question wouldn't have been asked. So if this woman's dad had put the stock account in his trust, then they wouldn't be telling her to go get an order from the court. Okay. If the dad had put, when I die, this account goes to my trust, or to my daughter, or to my children, or to my spouse, but if she's dead, then to my children, then none of this would happen. But obviously there is no beneficiary designation, and it happens. It happens. But that's just something to make sure you fix, and don't let that happen. It's a costly mistake. The court order, to answer your question, the court order they're talking about is going to the probate court and putting that $440,000 account through a formal probate procedure, filing a petition. Hopefully there is a will that your dad had with that trust, and the will says that I give my entire estate to my trustee then in office of my living trust. Hopefully that's the way it's set up, because if it is, then the will is called a pour over will. So you're probating that will, and the will says all money, everything goes into my trust. So that $440,000 is passing. The mechanism is the will. Through probate, it's passing that money into the living trust, and now it gets distributed per the terms of the trust. Okay. If that stock account were a retirement account, you can't title it in the name of the trust, but you could have the beneficiary designation going to the trustee of the trust, or you could have the beneficiary going directly to your kids. But that has to be set up ahead of time. All right. The court order is a probate court order, which would be called letters testamentary if there's a will, and that would allow her as the estate representative, as the executor, that would allow her to move the money from the account in dad's name to a probate account, not directly to the trust yet. And then once the probate order says, okay, put it in the trust, then she can put it in the trust. So it's going to have to be a two-step process, unfortunately. And to get it completed, it'll take between 9 to 14 months, because that's just how fast San Diego moves. That's a great question. Sorry you had to, sorry that happened, but it was a good question. Next question was life insurance beneficiary. That one for me is easy. Doesn't matter how much the life insurance is. You buy life insurance. So here's the question. I bought life insurance and the company wants me to name a beneficiary. Is it best to name my wife or the trust? And I've said this a lot, but just for repeat emphasis, don't name your wife, name the trustee of your trust. Don't name your husband, name the trustee. Don't give it directly to your kids, name the trust. Because what happens is when you die, all that money goes into the trust. It's under the control of the trustee. And who has control of that money after you die? Your spouse or the trustee to give it to your kids. So I like life insurance going directly to the trust. That's my favorite thing. I've never had that be a problem. Okay. Next, we're going to talk about your job as a successor trustee. If your parents, for example, have named you as the successor trustee of your trust, of their trust, and now they've both passed away, you've got a big job to do, and it needs to be done right. Okay, what we're going to be talking about coming up next is I'm going to go through the process of what happens if you are the trustee. I want to show you the steps that you need to take to distribute the property from that trust to the beneficiaries. Okay, if you're one of the beneficiaries listening to this, then you will see what the trustee's job is, and you'll be able to compare. If you're a beneficiary now and there's a successor trustee that's doing the thing, we're going to be able to compare and see whether they're doing their job right. And why do I harp on this? Because the money that is in that trust is under the fiduciary responsibility of that trustee, and it's required to be distributed according to the terms of the trust. You don't have a lot of flexibility. You can't go and, change your mind and say, well, mom actually told me in secret that all the money's going to go to me. I mean, forget that. It's whatever the trust document says. So we're going to talk about the duties of a trustee and how that works. That's going to be coming up next. Okay. If you want to have your question answered on the air, you can either call 888-344-1170, 888-344-1170, 888-344-1170, and you can be on the air and ask me the question, or just email me the question. Okay. It's easy. It's just wordonwealth@gmail.com, wordonwealth@gmail.com, and ask me your question and I'll air the question next time once I get it. wordonwealth@gmail.com. Coming up next, what is the successor's trustee's job? How they do it? How do they do it right? Coming up next on the Word on Wealth.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. So have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQlaw.com, 855-500-TRUST, GQlaw.com.
Every day you watch the financial market.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. GQlaw.com.
All right. How to be a good successor trustee. All right. So if you are a successor trustee and this is your job, you have what is called a fiduciary responsibility to do the job right. Fiduciary means that you are required to act in the best interest of that trust, not of a particular beneficiary. It's more like the beneficiaries altogether because you're trying to preserve the trust and distribute the assets in that trust according to the terms of the trust. And it's got to be precise. It's got to be done right. It's not something you just wing it. Okay. It really, it's not just a matter of saying, taking the trust estate and saying, okay, we've got, $463,000 and we're just going to divide it up 3 ways. It's not that, because we're just going to have parents. Okay. Your parents had a financial life and it went on for a very long time. In fact, their financial life lasted through their whole life. When they pass away, that all has to be resolved. It doesn't just vaporize and now they leave money and you take over. You have to make sure that certain things are taken care of, that their financial life comes to a stop, because you have to stop using their social security number after the date of death. You can't be using their assets for free. There's a lot of things that go on. So what we need to do, first of all, is when someone passes away, we have to look in the California probate code. Now, yes, probate is something you want to avoid. The probate procedure, the formal probate petitioning procedure process, we want to avoid. But the probate code is the law that controls trusts, wills, power of attorneys, guardianships, conservatorships. Okay, so we're under the probate code. That's what controls what we're doing. The probate code requires that whoever's in charge of the will deposit the will with the probate court within 30 days of the date of death. Then it requires that within 60 days of the date of death, that the nominated successor trustee give notification to all the beneficiaries of the trust, notification of the terms of the trust, along with this very specific language that describes their rights as a beneficiary. And it gives them 120 days to object to the terms of the trust. Also, it gives them the ability to get a copy of the trust. So what you do is you formally notify all of the beneficiaries of the terms of the trust, and you include with it the actual trust. Okay, that gives them the right. Now, if you never do that and it's been 2 years and you haven't done it and there's still money, there's still assets, if you hire me, I'm going to make you do it because the law requires it. And it should have been done 60 days after death. A lot of people miss that deadline. That doesn't make it okay, but that's something you got to watch out for. You got to get on it quickly. 60 days, it doesn't seem that seems like a long time, but it goes pretty fast. So 60 days, you got to do that notification. Also, all creditors need to be paid. They are first priority. Beneficiaries are last priority. So any creditors get paid. That's going to be the utility bills, going to be the final payments on, to wrap up any, credit card bills or, cable bills or whatever. They all get paid so that they're completely paid up. What I do too is I want to make sure that the creditors that we don't know about get notified. And so we do a publication in the a local newspaper with legal publications or legal notifications in it. And it basically declares that if there is a creditor of this particular person or people, then those creditors have to step forward within 120 days or else they can never step forward. Why do I do that? Well, most people will tell me, well, my dad had no debt. He was really careful. He was debt free. He lived debt free. He had no debt. He had no credit cards. I'm good. Okay, I get that. But your dad's house sat vacant for a couple of months before it got sold, right? Oh yeah, it actually sat for 6 months while we were trying to fix it up. Did anybody working on the property get injured or step on a nail or trip or injure themselves? Or did somebody fall? Did somebody crawl over the back fence? Did somebody get injured on the property? All those things have a claim against that property for up to 2 years. So do you want to wait around for 2 years for the statute of limitations for personal injury to pass? Or do you want to get that out of the way by notifying creditors? So that's why I try to get the unknown creditors out of the way. If there's anybody that is thinking about suing them for any reason, all those unknown creditors are getting notified by the notification that we put in the newspaper. And what we're trying to do with you as a successor trustee, your job, number one, is to get out of your job, to be done with it, to get to the point where you can be released as trustee. That's not your number one job, but that is your goal, is to be done, get it done right, and be released. Not just distribute the money and hope nothing happens and hope the IRS never comes after you. That's not you want to get it done right so you can be released and feel good about it. Next thing is you're required by law to notify the Department of Health Services. That gets done electronically. Then you're supposed to notify or prepare and get approval of an accounting of all of the trust assets. You either get an approval of all of the beneficiaries including minors, then it's going to have to be approved by their parents. But the accounting shows all of the trust assets and all of the expenses, calculates out how much each person gets, and it shows it in this accounting. Each person then authorizes the trustee's spending and the trustee's accounting. And when it's approved by all the beneficiaries, then you can go ahead and make those distributions. If the beneficiaries cannot agree to the accounting and they're fighting about it and saying, we wanted more money, we think you should get paid less or whatever, if there's any fight, then your job is going to be to file a petition in the probate court that says, I want to, here's the accounting, here's what I did top to bottom, here's all the money we spent, and you want to get a court order that says, good job, you are done with your job. Okay. So we got to either get it approved by the beneficiaries or court approved. Court approval is really difficult, but we do it a lot. It is better to have the beneficiaries look at it. They can have their favorite tax professional or financial professional to check it out to make sure that everything looks good, everything's copacetic, and then they sign off. And when everybody's signed off, then we're ready to complete the distribution of the trust, and we make distributions, write checks, get receipts, make everybody happy. Okay, that accounting is a big deal. A lot of people miss it. And then they get down the road, they've made distributions, and sure enough, 6 months later, they get a letter from some attorney that says, hey, my client, your brother, never got an accounting of all the assets, and he believes he should have got more money. For example, we didn't see the money from Neuberger Berman, nor did we see the account from the Schwab. And there was a piece of real property in Arkansas that nobody reported. So that's when you kind of like go, oh no, I missed something. And you don't want that to happen. Oh no, I missed something. That's a bad thing when you're a successor trustee. So get everybody to approve the accounting. That way, if there's anything missing, somebody will say, oh, hey, what about the Tennessee property that dad bought 2 acres next to that lake and didn't tell anybody? Okay. You're required to pay for, if you're the successor trustee, the trust sometimes has minor beneficiaries where there's money held in trust for them. And you are the one that is required now by the terms of the trust, potentially to pay for the health, education, and maintenance of minor beneficiaries, so that if somebody's under 18, then you have to figure out, do they need money for education or need money for whatever the trust provides and allows for. And that's going to be something that you're working with the parent or the guardian to make sure that the beneficiary, the minor underage beneficiary, is receiving their money as appropriate. And then once that beneficiary gets to the age where they can take the money, the balance of it out of the trust, maybe it's age 21, maybe it's 25, maybe it's 35, that's when your job gets to be done. Okay. If you're going to invest and manage any assets, there's money that's not going to be given away fairly soon, then your job is to manage the money and assets as a fiduciary and make sure that it's earning some money. You're going to pay for, you're going to prepare income tax returns for the decedents. Okay, so you're going to do mom and dad's final tax returns, and you're going to prepare an income tax return for the trust if it has more than $400 of earnings. So it has a bank account or investment account or a rental account, and it's got more than $400 in the year, tax return is due. So you're gonna have to do tax returns. Distributing assets, changing titles. If somebody's taking a home or a car or a motorcycle or something that has a title, their trailer, their toys, whatever, then the trustee's job is to make sure that those title transfers happen and that everything is accounted for with that. The final job is you're trying to get the trust closed, and to do that, you need to make sure that the trusteeship is terminated. All the assets are distributed, all the accounting has been approved. You're holding money back. Sometimes it's 20, 30, 50, sometimes $100,000, $500,000. You're holding it during the audit period in case the IRS decides they're going to change their mind on the tax return, or in case there's going to be some type of an audit. So there's often a holdback of money that gets held. And once the appropriate time is passed, then that money just gets distributed equally to the beneficiaries, minus a few dollars for tax returns or accounting services or attorney services that were needed in the meantime. Then the trust is ready to close, and not until then. Now, I've shortened it to 10 steps for radio purposes. There's actually a checklist we have which is 26. And so what we do is, if you are the trustee of your parents' trust and you're trying to figure out what to do, maybe you've already got started, maybe you're not even started yet, then it's a good job to get advice on exactly what to do so you can do the job right. You don't want to mess it up. It's going to be the first time you do it. Usually it may be the only time you do it, probably, but get professional help. That's part of your job as a fiduciary, as the successor trustee, is to delegate jobs that you cannot do professionally. So you need an attorney, you need a tax professional, you're going to need an investment advisor. You have to use professionals if you're not a professional in that area. Hey, this has been good. We had our reverse mortgage guy the first half. That was Shanne Sleder. You had me the second half. We're going to be back tomorrow with Ken Pecos, our mortgage guy. He is our expert. No, Ken Pecos is our real estate guy, and that's tomorrow with Ken Pecos on the Word on Wealth. Bye, everybody. Talk to you tomorrow here on the Word on Wealth with Ken Pecos.
Tell a friend about the Word on Wealth, featured since 1995, with financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics.